Okay, a very good afternoon here on the 21st of September 2018. Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference and the Traders Open Day. And a very warm welcome into the weekly market roundup where we look at world markets and teach a topic here at Master of the Markets and look at the weekly roundup actually for the summary for the performance of our trading models for the week. So as you know, here at Master of the Markets, systematic quantified approach is used towards the markets, which gives us ongoing sustainability and profitability. And you'll see that regularly for this year, we have posted a video every single Friday, each Friday giving you a roundup of the week's performance and how the trading strategies models have performed in real time, as well as the results on a trading account, which is funded and being traded. And you can see the results and the profitability growing on that account for the period of the year, proving the consistent approach of these trading models, which is exactly what we're looking to achieve. So just with the live trading room strategies alone this year, we have upside of just under £14,000 actually at the moment, which is great considering it's just 15 minutes a day of work with the swing trading strategies. And this week, the contributing factor to that figure, of course, was the Euro US dollar, which is a trade that we took around 2 weeks back, but only banked out yesterday here on this large seller bar. And we can, of course, look at the trading setups that have contributed towards the profitable growth. If we start by looking at the live trading rooms journal this week, you can see that the Euro US dollar has given us a profitable trade banked yesterday, the 20th of September, and we were out of the market at 117.27 on that PSWB long, taking a 1.79% profit, or translating to £1,830 of upside on that particular trade just there. So what was the trade that we took? Well, of course, as you know, for those of you, of course, part of the live trade mentorship, Vedanta Elite Trading Rooms, you'll know and understand that this was, of course, a PSWB setup in line with the specifications that we do usually look for. We entered this market long on the close, so our entry price was just there. Our take profit was at this point up here, which was 117.27, and that was hit into yesterday. You can see the current price is 117.45, so it was just around about that level just then. That was only hit yesterday. We actually had to hold this trade for 2 weeks for it to progress to the point at which we did. We did hold it for 2 weeks. We trailed the stop in between, and you can see just yesterday it was opened on the 11th of September, but closed only on the 20th of September. For 2 weeks we held that, and you can see £180.30 was the upside profit from that particular trade just there. One thing you'll also observe as well is that the previous Eurodollar trade that we took was a losing trade, losing us minus £700, but you can see this one here making up the loss and then some, of course, taking us into a profit of £8,900 this year on just the money bars trading model alone. So of course, we do trade 3 trading models in the live trading room and a further 4 models in the Vedanta Elite room. Speaking of Vedanta Elite, let's go on to the trades that they took for the week. If we look at their trade journal, we can quickly see the setups that were taken this week. The first one here, of course, on prime profits, again on the Eurodollar long. You can see that didn't bank out too much. It's a very small profit of 0.07% just there. They were entered on the long. They were entered long on Eurodollar at 116.72 and out of the market at 116.76. So not much of an upside there. Only a 0.07%. But the big winner on the Vedanta Elite Room this week, of course, was the gold bars trade just there on Eurodollar, which has banked a 3.5% return in just one trade. And I do believe that that was opened on the 17th and then banked on the 18th as well just there. So within 24 hours, we've taken that 3.5% off the table. Very clever setup, of course, gold bars. Has been performing well for us this year, and we can review the individual strategies. We'll do a separate video to review the elite trading strategies and their performance as well. So you can see that again we entered at 116.22 The market 116.22 is where we entered. So that was this figure just here. So 116.22 would have, of course, been this low just here, in fact, is where we would have entered. We actually, the magic behind that gold bar strategy was that this buyer bar here actually entered us into the trade long. So even though initially that buyer bar was moving against us, we were triggered long just here, and we took that all the way up to the top, and I do believe we took profit off the table at this level, which is what helped us to bank that 3.5% profit target just there. So that's the key behind the gold bars trade that we took, 3.5% just there. Of course, the total for the week is £5,400. It was 5.47%, I believe it was, something like that. The title is on this video, in any case, made by our colleagues there in video production. But that was the profit for the week just there. And that's how we arrived at those figures. So a very healthy week for us here. Once again, we had a superb week last week as well, with the Vedanta Elite trades banking 6.06% on this dollar Swiss move, which was taken just there. So that was taken off of the close here, and we took that all the way down to the low at this, around about this level just here, and that was a 6.06% profit last week on the dollar Swiss. So of course the Vedanta Elite room is absolutely cleaning up at the moment. They've exceeded a 10% profit for the month, I believe. And so they are actually doing a superb performance at the moment. So congratulations to everyone in the Live Trade Mentorship, Advance, and the Vedanta Elite rooms. You are in the business, so that is the key just there. So we are looking at that, and we are continuing on forward with the trade opportunities for the rest of this month. But it does look like September is going to be one of the biggest months in the history of the Master the Markets trading rooms and spaces for us, banking around in total, including the Live Trade Mentorship, Vedanta Elite rooms. We've taken around about 15% off the table in total. Very, very healthy, and we're very, very happy with that. I'm sure the customers are too. So the great thing about this methodology, of course, scalable and reproducible. Let's go on to the topic of the week, which of course is around risk management. And there are two different ways in which we can look to manage. There are multiple different ways, to be honest, of how we can manage risk when we're taking trades. But I want to discuss two of them. The first one is, of course, the percentage risk management methodology, the percentage risk management methodology, where let's say we have an entry here on a PSWB for money bars, we have a stop on the low just here, we determine the distance between entry and stop loss, and we understand that to be, let's say, X, and then we have a percentage management of a monetary amount of our trading account. So let's say, for example, we have a small trading account, let's say £50,000, and let's say we choose that we would like to risk 2% of that £50,000. So that would basically work out as £50,000 multiply by 2%, and that of course divided by X, which is our trade risk. And that, of course, what that would do is give us the number of pounds per pip that we want to devote to that particular trade setup. So, you know, this percentage risk vessel can vary. We always tell beginners that Traders Base can package to risk 1% of the trading account, of course, because they're new into their journey. But of course, later on down the line, we risk much more than 1% to get the bigger amounts of profit, because we have methodologies and methodologies which will give us consistently scalable profit. So of course, we can risk much more than just a percent. So you choose the percentage risk and you do it of your trading account. You divide it by the number of pounds per pip. That's your first way of managing risk. Let's look at another way. Another way is simply to say that on every trade that I take, I'm going to take a £750 risk. So that £750 is, of course, X. You make that number whatever you feel comfortable with, and then regardless of the distance between the entry and the stop loss, that no longer matters. All you do is you just size every trade for £750 risk, and then the way you would do that, of course, is just by saying that, right, okay, my 750 is my trade risk. On this particular trade, let's say I'm risking 75 pips. That would basically mean I will be trading this at £10 per pip on that particular trade. Now, you may take another trade, which is, let's say, only 50 pips of risk. So you'll take your same 750 again, you'll divide by 50, and then you will take your percentage risk management. You'll take a risk management that way. Now, it's not necessarily 1% of your trading account anymore, maybe 3, maybe 5, maybe 10% of your trading account. You choose the risk. But of course, you need to know your maximum drawdown as well, because if you don't know that, then of course your risk may be too high and it may blow your account up before you see the upside of your trading strategy. Remember, every single model that's traded here at Master the Markets, we are clear on several things. We're clear on its peak to valley drawdown. We're clear on its maximum loss cluster. We're clear on its seasonal variations, how it varies from season to season. So we can see if we are in line with the opportunities as well. So that's the key just there. So that's pretty much it from the weekly market roundup this week. As I said already, we have looked at the key currencies, these dollar Swiss trades that we took. Of course, the GBP USD, you can see a retracement taking place just there. Quite a healthy one as well today. A lot of profit taking on these various currencies, and that will give us some lift-off setups potentially into next week as well, so we can review that too. But for us, £5,400 in the bank this week is quite a healthy week, and we'll look to continue that on into the rest of this year. Until the next time, stay disciplined, follow your trading plan, and keep trading like a master. Bye for now.